Hello and welcome to Market and Sector Analysis, another great webcast from Schwab Coaching. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab, and I'm joined out there in the chat by my good friend Connie Hill, who's going to be helping to answer your questions along the way. Connie, a 20-plus year veteran of the financial market, which means she started when she was about 6 years old. But I'll tell you what, Connie is a phenomenal resource. She's going to be there to help answer your specific questions along the way. We're going to be talking about the news of the days, well, at least the news of today, and how that's impacting the market. We're going to talk about interest rates. I've got a look at energy prices, and then we'll drill down into the components of the market, those sectors, and see how those sectors are performing. Then we'll look at maybe some individual position ideas and examples as we get into this discussion today. But a couple of quick housekeeping items first and foremost. Remember, everything we talk about simply for illustrative and educational purposes only. It is not a recommendation of any specific security or strategy or account type or anything else. When we talk about individual positions, they are simply for illustrative and educational examples. Remember, we're going to be using a lot of technical analysis, a little bit of probability analysis, some intermarket analysis. But all of those are theoretical in nature. None of those are guaranteed. Schwab doesn't recommend the use of technical analysis as a sole means of financial research. We're going to be using the Thinkorswim desktop software platform, specifically the paper money version. Not a guarantee of future success out there in the real world, but it is a great sandbox to learn and practice in. Remember that all investing involves risk, including the risk of loss, and in some products, more than your initial investment. Be aware of that. If we look at the futures markets, we're going to be using those simply for futures, for a definition of what the market is doing, not specifically focusing on trading those futures products. So I just want you to be aware of that. But if you're going to trade futures, remember that futures trading requires separate trading authorization. It is highly leveraged. It is not suitable for all investors. Make sure that you understand the characteristics and risks of those strategies before considering any futures trading strategies as well. Of course, remember that past performance is no guarantee of future results. So let's kind of get a sense of where we're going. We're going to talk about sector and market trends. We're going to talk a little bit about the economic drivers and some of those potential risks that are out there. And if you've been watching the news and if you've been paying attention to social media and those types of things, there's a lot of those potential risk factors, perhaps, that are, or risk indicators that are swirling around the market at the moment. But let's see if we can maybe put some sense to this. Somebody asked in the chat earlier today if we could make the market behave. And unfortunately, we can't make the market do anything, but what we can do is bend the charts to our will and see what is going on in the market at any particular time. All right, let's jump into this discussion here as we get into the assessment of what's going on in the market. It has been kind of an interesting day, and I know I say that a lot. I said that this morning when I was talking about, sorry about this, I got it, my microphone cable kind of wrapped around me here, so we're going to make sure that that's not going to pull out. There we go. When I started talking about my index options class this morning, our webcast that we do on Wednesday mornings, we looked at what the market is doing. And this morning, early, this S&P 500 move was a little bit of a gap down and a bit of a rally, it was a gap up and a bit of a sell-off into that bearish engulfing candle. It has now turned a little bit. We've seen some buying pressure stepping in, coming up off of those lows, and we get now a little bit more of a hammer-like candle here down at a support level, the RSI coming back out of the oversold range. Now, the reason that this becomes significant for some traders, including some institutional traders, is that little switch right there, that little toggle flip, if you will, is and could potentially be a buy signal for some algorithmic traders looking for a push below that oversold range and then a flip back up into the middle range of the RSI, the relative strength index, right? So that push to the downside, down through the 30% level, and then back up through. If that holds into the end of the day, we're just about an hour off of the end of the day here, that could be a buy signal. So we might see potentially, from a technical analysis perspective, some of those algorithmic triggers kicking in, given the fact that the SPX was sitting right at this support level, just about at that big round number. We're at 5612 now. 5600 from a psychological perspective could potentially be a support level. Seeing a little bit of price discovery here in these candles with those lower shadows moving down just a little bit. So this could be a turnaround, but there is absolutely positively no guarantee that it is going to be here. We're just seeing that as a possible potential algorithmic trigger, that move below and turn back higher. And there might be some traders, given the fact that this is below that 200 period moving average, are looking for this circumstance to occur. A flip below the 30% level on the RSI and then back above, and then a break back up above the 200 period moving average. So if we get a couple of candles that move the market up to, in this case, the SPX, up to that 200 period moving average, that could be another technical level that might trigger some institutional buying activity. So it wouldn't be at all unlikely to see some upward movement around that area. It doesn't guarantee that it's going to turn around and move into an uptrend. It just simply means that that is a point where there might be some buying taking place. So we could probably argue that this whole area right in here between about 5,600 and about 5,700, where that moving average is, could be a buying area where there's some buying activity present. It's just not there today necessarily, although it is coming up off of the bottom. And we're going to drill down a little bit into some of those areas in just a few minutes. But taking a look at the NASDAQ, the technology focused and technology heavy index here, we look at that again, toggle below and then back above. We get what we could perhaps call, in this particular case, as there is a little bit of separation there between these two candles, we could call this a morning star. This would be a morning star type of candlestick pattern. The poetic part of that name suggests that it is the dawn of a new uptrend, but there's no guarantee of that. That simply is kind of the nice, polite way to say, hey, maybe it's bouncing and there's some dip buying going on. And we can see that dip buying happening here because originally this was a gap up and a little bit of a sell-off, and now we're starting to see this move to the upside. And let's take a look at the Russell 2000. And the Russell 2000 also giving us that kind of morning star look here, with a move lower and then a turn back to the upside. Not quite an abandoned baby to the downside here, but not an idealized morning star, looking pretty close. But the Russell 2000 not toggling back up above that oversold level. And we can see that it's been staying down in that oversold level for a little while. So we could see a little bit of sideways movement. For those of you that were in my index trading index options webcast earlier today, you know, we took a look at this scenario where there might be some possibility of movement to the downside. And Siri asks the question. Usually it's me asking Siri the question, but Siri in this case is asking the question, what is a morning star? And a morning star is a candlestick pattern. Usually it's a 3-candle pattern where you get a down move. Now, this is green because that's with the color of my magic marker, but usually it's a red candle. And then you see a candle here that becomes either kind of a spinning top type of candle or a doji or a hammer type candle. And then you see some little bit of a separation there, and then you see a move higher. That candle pattern, those 3 candles, indicate oftentimes a reversal, right? The idea being that that becomes the dawn of a new uptrend. Gap down, equilibrium, momentum back in the other direction just simply indicates the possibility of a reversal. And that's kind of what we're seeing right here. Down, equilibrium, move back up in the upside. But we're not seeing it followed by a move in the RSI quite yet. So that becomes a maybe a little bit of a pause moment here. Now, Connie also reminds me and reminds us that it's a good opportunity to click on that subscribe button down here in the lower right corner of this webcast. That's going to help you stay connected to the Trader Talks webcast channel. You can also follow me. You can follow Connie Hill as well as all of our other education coaches on our X handles. Mine is at Ben Watson CS. Connie is at Connie Hill CS, and you're going to see the other coaches there with similar handles. They all are ending with CS, the letters CS. Just one quick note while I've got you talking about this, if you happen to see a Twitter post with a handle that's kind of like ours, but not quite like ours, it's probably not us. It's probably an imposter, and there are some of those out there. Be aware that we're never going to solicit you to trade something. We're never going to solicit you for money or anything else or try to sell you anything. Those are imposters. They are out there. Be aware of that, just so that you know, and so that is there in your mind as you're keeping these things in mind. So this is the Russell 2000. This is the small caps, which tends to be a little bit more interest rate sensitive than others, simply because these small caps are more sensitive to the rates at which they borrow money. And they also tend to be associated in the small cap index, the Russell 2000, with regional banks. And so financials are going to have an important part to play here as well. But overall, this is still also driven, the Russell 2000, driven by technology, much as the NASDAQ and the S&P 500 are driven by technology stocks as well. So let's kind of pay attention to this composition and let's see if technology is calling the tune today, because we've seen that technology sector be perhaps the leader to the downside. Let's see if it is the leader in the reversal to the upside. So I want to change this grid really quickly here. I want to take a look at our yield curve grid, or our yield versus the SPX here really quickly. So as we look at this, this is the S&P 500 versus the 10-year yield. So here's the 10-year yield. That's the white line. S&P 500 is down here in the blue line. So we've seen the 10-year yield. This is interest rates moving down and now starting to tick back up in the short term, right? Short to intermediate term. That correlation is kind of dissipating. They were moving kind of in lockstep with one another. Yields down, S&P down. Now that correlation is kind of bleeding off a little bit as yields rise just a little bit and the SPX kind of turning just a little bit here. But this may be a little bit misleading. I want to pop over here really quickly to the yield curve, because this might tell us a little bit more. And this is the 10-year minus the 2-year. So this is what's referred to typically as the yield curve, right? This is when economists and news pundits say that this curve is inverted and that could lead to something like a recession. Well, this is that line that kind of denotes inversion, right? Below the zero line would suggest that the yield curve is inverted, and it was up until about September of this last year. Now that yield curve is normalized, which means that there's more risk out in the future than there is in the near term. And we can see that the steepness of that line is increasing over time. The steeper this line gets, generally that suggests that maybe there's a little bit more bullishness in markets in the near term. So if this line continues to get a little bit steeper, this yield curve steepens out a little bit in that normalization. That could be a little bit more of a bullish sign, especially if the market is moving to a support level and giving us indications of a potential move back to the upside. It does not guarantee that the market is going to move in a bullish direction, right? And if we were to just look specifically at, let me go to my single grid here really quickly. If we were to just look specifically at this /10Y, Now, 10Y is the futures market that shows interest rates or yields. This governs things like mortgages, auto loans, credit card interest rates. We can see that near-term move has been up in the yield curve, meaning bonds have been being sold and interest rates have been rising, yields have been rising. But you notice what's going on here? As you start to see this pattern developing here, we talked a little bit about this. I tweeted about this or posted about this on X earlier this morning. What kind of technical price pattern do we see building here in the 10-year that could have some significant impact on the market as a whole scenario here, right? Anybody know from a technical analysis perspective what that's looking like? I'll leave it out there and see what you think. See if anybody finds that. And I want to talk to Sergeant Chuck's question here for just a second, which is the Russell 3000 represents 96% of all the investable U.S. equities. Why is it not referenced? Whereas the Russell 2000 oftentimes is. The Russell 2000 tends to be a more concise and more exclusive index. The Russell 3000 also includes a lot of OTC stocks. And from that standpoint, oftentimes is maybe too broad of an index for many economists. And that's maybe one of the reasons perhaps for that. But yeah, you're absolutely right, guys. Head and shoulders, building that right-hand shoulder, kind of running into that 4.35 resistance with the neckline down here around that 4.12. So here's the thing to think about. You know, if interest rates and the market have been kind of moving in lockstep with one another, and we see this break to the downside, meaning lower interest rates, let's go back to our yield versus SPX view, and we see that scenario. If interest rates go lower, that could be the counter to that steepening of the interest rate curve, that non-inversion of the curve. So we got to kind of pay attention to some of these things. So this is maybe for those that are watching kind of the relationship of broad market movement. This is something to pay attention to, is the relationship of the market, the SPX, to interest rates. Also the relationship of the small caps to SPX. But one of the things I also wanted to do really quickly while we're talking about this is I wanted to look at the S&P 500, the kind of broad cross-section of the market, the SPX, relative to their kind of the moving averages, right? So this graph really just simply shows the percentage of the S&P 500 that is currently above a particular moving average. So the three that I've got here in this list: 50 period simple moving average, 100 period simple moving average, 200 period simple moving average, and there's the SPX. So what this is telling me right now is that about 67% of the market is kind of in that range of being above the simple moving average, the 100 period simple moving average, not quite as many above the 50 period simple moving average, and then the 200 period simple moving average. When these start to turn higher, when we start to see those numbers increasing, that would indicate maybe a broader rise in the market. This would suggest the fact that all of these are down lower would suggest that any market leadership, any gains that we're getting are not broad, but individualized, which means that there might be some short-term leaders that are taking this market higher, at least at the moment, because it's coming up off of the bottom. Remember, we saw that kind of hammer-like candle today. So there's some buying going on. It's just not broad buying here. The ones that we're starting to see turning up a little bit is above the 200 period moving average, which suggests that a lot of stocks in the S&P 500 had been pushed below their 200 period simple moving average. That just simply means that this push to the downside has been going on long enough that it's probably broken some of those long-term trend lines. And I will share this particular grid here. Since you guys all asked nicely, I'll go ahead and share this grid. and I'll click on share. Now, anytime I share anything in the chat, it is for illustrative and educational purposes only, and it is not guaranteed as to time or accuracy. So there's that grid right there, the S&P versus moving averages. All right. So that's kind of the broad market. So let's take a look at some of the news that happened today. One of the things we can do is we can pop over here to the left-hand side. We can change one of our icons. One of the great ways that you can get news on an ongoing basis is to check out the Schwab Network right here on your Trader TV gadget on the left-hand side. The Schwab Network brought to us by our media affiliate, Charles Schwab Media Productions, which is a separate but affiliated company. I host a show on there called Your First Trade. Connie Hill is a frequent contributor to that show, but you can find that right there on the Schwab Network. That's a great way to get your news on an ongoing basis. But another way to do that is to come down here to live news, and you can see what's driving the market. You can see a variety of things that are going on in the market. So we just had a CPI, or Consumer Price Index, print today, which was a little bit lower than expected. And so that might be helping perhaps to ease some inflation fears, at least in the short term, and that might be helping to lift this market a little bit. One other thing I wanted to look at before we move away from the broad market as a whole is I wanted to look at energy prices. Now, I'm using /CL. This is the crude oil futures market. I'm not looking at this as a trading instrument, but I'm looking at this as a measure of oil prices. And I can see that in the last two trading sessions, oil seems to be coming back up, testing this resistance up around the 67.77 mark. A little bit larger draws on inventory, both in crude and in distillate supplies like gasoline and heating oil than in previous weeks. And that may indicate, at least in the near term, some growing demand. Growing demand is good for a healthy economy, right? And so that may lift those prices a little bit, may give some lift to the energy sector as well. So a number of things might be kind of coming together, if you will, these market forces gathering and potentially assembling. So what I want to do now is I want to kind of break this down, the market as a whole, into the segments of the market. One last thing before we do that, though, I wanted to take a look at kind of the volatility level of the market. And so what I want to do is I want to look at my VIX grid here. Now, here's what's really interesting. You notice what's going on with the VIX. The VIX is the volatility index for the S&P 500. It's kind of like the gauge of, if you will, to a certain extent, fear, right? Because when market participants, namely institutions, are fearful about the market, they buy protection. When they're buying protection, they're typically buying index put options. When they're buying index put options, those put options become more expensive because they're willing to pay more for the protection. So when there's fear, or a lot of fear, the VIX tends to spike. When there's not a lot of fear, it tends to bleed off. They don't typically tend to hold that protection for a long period of time. It tends to normalize very quickly. And we can see that happening here. We saw over the course of about a week and a half, a pretty good grind to the upside in the VIX, and it now seems to be bleeding off pretty quickly. So if we kind of look at this in the relationship of the VIX to the S&P 500, VIX moving down and the SPX moving kind of sideways-ish today, if you will. We saw it initially a little bit more down, but that's an unusual scenario. When you have the market moving down on that gap up sell-off, and the VIX bleeding off, that's an unusual relationship. Typically, if we saw the market down with a red candle, we would be seeing green candles on the VIX, and we're not seeing that. That would suggest that there is some potential buying stepping in. Not a guarantee by any means, but from a technical analysis, from a market relationship basis, that would be a suggestion that might be going on here. Now, with the market potentially turning around, we talked about that possible bounce, that morning star type of candlestick pattern there. We could see the VIX pulling back a little bit. That would suggest that volatility is a little bit less, that there's a little bit less fear in the market, that there might be some rotation into some areas where money is now getting put to work. Money doesn't sit on the sidelines for very long. It may come out quickly, but it also goes back to work relatively quickly. And that leads us to then ask the question, where, right? Where might that money be getting put to work? So let's do this. I'm going to change this now to my sector grid. And we're going to look at the S&P sector index grid. So each one of the sectors of the S&P 500, each one of the 11 sectors has its own index, much like the SPX, NASDAQ, Russell 2000 are indexes. These are the indexes of the various sectors of the market. And so they're labeled $SP 500, pound 10, 15, 20, 25, 30, 35, 40, 45, 50, and you can see those along the way. I've labeled them as to what those sectors are. So we've got energy, materials, industrials, consumer, technology, consumer discretionary, consumer staples, healthcare, financials, information technology, which we refer to as the technology sector, along with communication services, which is also oftentimes lumped in with the technology sector, utilities, and then real estate. So that's kind of the breakdown of the market here. So kind of taking a look at what's going on. Now, these are squished in views. These are all one-year daily charts. We're looking at the hard right edge of these charts. So you don't see the overall trend. But what we do see is what's going on in the near term. So this is, in this particular case, on each one of these, this is a 50-period simple moving average. That 50-period simple moving average is either pointing up or it's pointing down, right? And pointing up or pointing down, or in the case of financials, maybe kind of going sideways, is kind of the indication of where strength is or isn't. So we could just say, for our purposes in this discussion, that an index that is gaining strength or a sector that is gaining strength has that moving average starting to turn up. An index or a sector that is starting to lose strength or has been losing strength has that moving average that is pointing down, right? So that's going to be kind of our objective measurement here. And yes, I will go ahead and share this as well. I shared this yesterday morning in the Trader Talks webcast with Jeffrey Abelos. Monday morning. And I also share this in my Friday afternoon Market Movers webcast. But I'm going to go ahead and share it here once again. And again, remember, anytime we share that, it is for illustrative and educational purposes only. So James says, well, there's no strength right now. And actually, there is some strength coming in here. And some of the strengthening areas might be in the consumer staples space, right? Now, in the short term, we see a little bit of a move to the downside, but that consumer staple space certainly starting to turn around and move back to the upside. Healthcare starting to see a little bit of strength bleeding in here. Certainly energy. So let's start with energy as well. And we'll just kind of go through these really quickly and see what is going on in relationship to that moving average. So overall trend here in the energy sector is sideways, but it's gaining some strength here in the near term. We see this kind of little bull flag type move, down candle and a close up off of that low a little bit here in the energy sector. So some strength bleeding back in energy. Let's take a look now at materials. I would argue that materials still making that move to the downside. We had a little bit of a head and shoulders reversal. We might be coming back down into a bit of a support level here on this index. The industrials breaking a support level, but right at that support level. This intermediate term trend kind of still moving to the downside. So industrials maybe at worst going sideways, maybe at best going sideways, at worst still downtrending a little bit in terms of industrials. Consumer discretionary. And we've seen the discretionaries. And discretionary had this perhaps the strongest trend outside of technology. But after this kind of double top pattern through December and into January and into the first part of February, has broken down below that level and has been moving quickly to the downside. What's been leading consumer discretionary to the downside perhaps is that uncertainty, right? The uncertainty of prices brought by tariffs or whatever other reasons might be there. But consumer spending retail sales numbers, consumer confidence, all of those market indicators and economic indicators kind of taking a hit. And that's been weighing on consumer discretionary. Now, you think about what are some of the things that work in consumer discretionary. We think about the retailers oftentimes, and we think about airlines as being industrial stocks, but by and large, airlines are driven by the trends that are going on in consumer discretionary and consumer spend. So we've been seeing the airlines bleeding off as far as some of their strength. We saw warnings from a guidance perspective from Delta, from United. We've seen warnings and changes coming from Southwest, and that's been helping to lead this consumer discretionary sector to the downside. Consumer staples was gaining some strength and in the squeezed in view, but I'll tell you what, we just saw that break below the 50-period moving average in this move to the downside today. So it may very well be that there isn't a lot of strength here in consumer staples until we see a turn to the upside. So that lag imposed by that 50-period simple moving average in this particular case may be a little bit misleading in the fact that maybe there's that strength is bleeding out of consumer staples. Healthcare kind of sitting right on that support level in this particular case of that moving average. But healthcare has been in a pretty strong run to the upside. It's not quite yet breaking a support level or that double bottom neckline, or double top neckline. So not reversing to the downside necessarily, but not necessarily gaining strength at the moment. Now here's financials. And financials, like I said, we're kind of going sideways. And again, we can draw that line in here. We can kind of see where that level of support might be, where financials buoyed by falling interest rates now might be saying, well, wait a second, we also make money as a financial company based on assets under management gathering interest. And if that interest isn't there, then our revenue stream might be falling short a little bit. And so that reality kind of coming home to roost here, despite more mortgages being initiated, more car sales, possibly, and more credit cards being taken out, but then as you start to see, interest rates change, you start to see things like credit card delinquencies coming home to roost too. Infotech. Now, this is a good example, going back, Siri, to your question of what is a morning star, right? And there is a morning star, clearly, that candlestick pattern occurring here on the information technology, that technology sector space. And today's candle, which was a bit of a gap up and a sell-off, is now turning into a little bit of a doji above a level of support. Not enough yet to turn the moving average, but it is certainly showing perhaps signs, possibly, of some rotation back into some strength. Not necessarily the leaders, but perhaps that turnaround. Communication services, again, the same kind of thing, right? A more clearly defined morning star pattern here on the communication services sector, and maybe a little bit of sideways trend. Utilities, seeing a bit of that strength. Now, not at all uncommon to see utilities gaining strength in periods of falling interest rates, because these are companies that borrow money for infrastructure. And so when those rates go down, these tend to perform a little bit better. Real estate, also likewise, same reason, right? As interest rates come down, those mortgage interest rates go down a little bit as well. But this is also battered somewhat by those consumer confidence numbers, potential for inflation, uncertainty, and outlook about employment and other circumstances going forward into the future that can weigh on the real estate sector as well. And there's the SPXs again. So to James's point, there isn't a lot of strength there, but there is, we're starting to see some possibility of a turnaround as we start to see that morning star type candle pattern developing. Perhaps the strongest of that was in that information technology space, So let's do this. What I want to do, since we know that we saw that here on our sector grid, and if we were to take this back and we were to just restore those cells, we can kind of come back and we can say, all right, there's where we are. We've kind of moved those around, and we can see where that turnaround possibility is in infotech and communication services. What I'm going to go to next is my Market Watch tab, and I'm going to open up the Visualize sub-tab, and we're going to look at the S&P 500. So looking at the S&P 500, this is the broad cross-section of the stocks within the S&P 500. This is today. This is today's performance ahead of the close. We're now less than 35 minutes before the close, and we're starting to see the possibility of gaining some strength here. Where are we gaining strength? So the visualization here is red is down, green is up. The size of the box is market capitalization. So Apple's down 2%, but NVIDIA up 6%. Walmart down, and that's where we're hitting that consumer staples down 2%. Kroger, Coca-Cola down 1.5%. Procter & Gamble down 2.92%. So that might be rotation out of some of those staples into something like a Tesla, which is up 7% today, into a Wells Fargo in the financial space, which is up 2% today. American Express, which is up 2.4% today. Palantir up almost 8%. Micron Technologies up almost 8% today. That's where some of that strength is coming. CrowdStrike up 5%. So the brighter the green, the stronger the performance. The brighter the red, or the more intense the red, the weaker the performance. We come over here and we take a look at Target getting hit to the tune of almost 5% to the downside. So let's take a look at a couple of these where there is some strength, perhaps in Palantir. And so we'll go back to our chart. I'm going to go to my single grid here in Palantir. We'll take a look at PLTR and see if there is that possibility of strength here. And so somebody looking for, again, that morning star type pattern, down, equilibrium, and then momentum back to the upside, might be looking at this as a potential trend entry. Maybe looking for a break above some resistance levels here in this particular case. But if we look at something like also NVIDIA, so NVDA, seeing that same type of pattern here, also TSLA, which had been pushed to the downside, seeing that little bit of a turnaround, some dip buying going on. Like I said, algorithmic triggers perhaps kicking in on some of these stocks. And let's take a look at MU, which got an upgrade today and ahead of the earnings announcement. It has been kind of trending sideways, but the significant thing that I happen to notice here on MU is this break of this diagonal downtrend line, and for some traders that could be an indication of upward movement. I'm going to put the RSI on here. We'll put RSI on here as a technical indicator, and we see that that RSI also breaking kind of that technical downtrend line. So we've got strength coming in. It's above the 51% level in the RSI, so it's above the midpoint, and we see an upward tick. So for some traders, that type of move, even though it is in kind of a sideways trend, the break above that technical diagonal downtrend line right there might be an indication that says, hey, this bus might be going north instead of south. So some traders may look at stepping into a position. In fact, let's do that here in this particular case. I'm going to right click and we're going to click on buy, and we'll create a position here. This is an illustrative and educational example. This is not a recommendation. But what we're going to do instead of just buying it is I'm going to put a stop on this trade just below that diagonal downtrend line. So if this does turn around and come back down right away, then we've defined our risk at least by the use of a stop in this trade. So I'm going to come in and I'm going to right click and I'm going to buy custom with stop. And we're going to make that stop right about the 90.70 level. So we'll say, all right, we're willing to get into the trade at 95.67 where it is right now or thereabouts. And we're going to stop this if it goes out at 97. Whoops, let me put that there. 90.72. So we'll go 90.72 as our stop. We'll make that good till canceled. I'm going to open up this lock and we're going to come in here and see if we can get into this trade in this particular case as we get into the close, as this is moving a little bit higher. But we're going to put a stop on it so that it takes the trade off. Now, remember, Stops don't guarantee our execution price, just the activation price. But we're going to go ahead and enter this breakout trade here right now. And I'm just going to go ahead and put this down in my stocks subgroup, read through the order, make sure that that's what I want, and make sure that there are no alerts down here that we need to pay attention to. This one, the reminder about stop orders. And we're going to go ahead and click on send, and we'll see if we can get into this trade here as this continues to move. We might have to bump that a little bit. There we go. It filled at 95.77. Now we've got our stop order in place to take that trade out if it does turn back against us. So we've taken this process, we've kind of looked at the broad view of the market, and we've now narrowed our focus down into an area where we saw a bit of a turnaround and we saw some strength. That's that top-down analysis process that often is used in looking at market and sector analysis. So the things that Mike talks about on a regular basis here, I know he does a number of things in talking about fundamental analysis. We were simply looking at this from a technical analysis perspective. You guys had some great questions today. Yeah, I mean, there's an earnings announcement coming up. We look back at past performance. And again, remember that past performance is not a guarantee of future success, but the past few earnings announcements on this stock have been in the same kind of context, right? So right around that pullback level into a support level, and then a bit of a move higher. So thinking about, an earnings announcement being just over the horizon, that's not necessarily a reason to trade or not to trade. From that perspective, because that is news and it's a known news scenario here, right? So we've defined our risk, or at least managed our risk somewhat by the use of that stop order to take us out of the trade if the trade turns around and goes against us. So if we get a big move to the downside on the earnings announcement, then we've got a stop order in there to take the trade off if it does. Now, some traders might use other types of strategies like protective puts or other things. We've got lots of great resources to help you learn about those things. If you wanted to learn more about it, come over here to youtube.com/@TraderTalks webcasts, or check out schwab.com/coaching. But if you wanted to learn about something like protective puts, just search in the box here for protective puts, and you've got a number of webcasts that can help you understand a particular strategy like protective puts. So it doesn't have to be that. And remember, anytime you're considering any kind of an option strategy, make sure that you are aware of and have read the risks and characteristics of standardized options so that you understand and are aware of those things before considering any option strategy. But this is also a great place to catch up on any other of the skills or ideas that we've talked about today that you might have missed. And you can also find Connie Hill over here as well in her webcasts. You can find Barb Armstrong and all of our education coaches over here as well. And you can also find us on X @BenWatsonCS, @Connie Hill CS. We'd love to have you find us over there and follow us over on that location. But make sure that when you are here in the webcast channel, click on subscribe if you haven't done so already, so that you stay connected to that webcast. So we talked about a lot of those things. We talked about economic drivers. We examined interest rates and potential for inflation. Talked a little bit about political risks and economic risks, and looked at market and sector trends and economic drivers. So now it's up to you to go out and apply this. Hey, I'll be back on Friday afternoon talking more about this specific idea, kind of taking a look at what happened over the course of the week in my Market Movers webcast, as well as other webcasts throughout the day. Thanks for being here. Thanks to Connie Hill for helping out, and thanks to our great production staff for keeping things running and going out the door. So we will see you guys again in our next webcast. Have a great day, everyone. We will see you again very soon. Take care. Bye-bye.